Let's forget about the daily price charts for just a moment. Because behind all that noise, there's a massive, silent shift happening in who actually owns Bitcoin. The big corporate players that drove the last bull market, well, they're disappearing, leaving behind a fascinating and maybe even fragile new landscape.
Here's the headline number. Corporate buying of Bitcoin, which was once a major market driver, has collapsed. And I don't mean it's down a little. It has plummeted by a staggering 99%.
And let's be super clear about what that 99% actually means. It's not that companies are selling off their holdings. It's that, with one very notable exception, they've almost completely stopped buying. The corporate appetite has just vanished.
So this leads us to the key question we're digging into today. If pretty much every company has backed off, who's the one player left standing? Who's holding up this entire side of the market all on their own?
Okay, this is where the story gets really interesting. We're not just talking about a dominant player here. We're talking about a market that has effectively shrunk to just one single major buyer.
And that buyer is MicroStrategy. According to a deep dive report from CryptoQuant, they have become the one and only engine for corporate Bitcoin demand. This is a classic example of what analysts call smart money. Institutional investors making huge strategic moves against the wider market trend.
And just look at the scale of their activity. In the last 30 days alone, MicroStrategy has aggressively scooped up about 45,000 Bitcoin. That's the fastest pace they've set in almost a year.
This slide really puts that into perspective. On one side, you have MicroStrategy buying 45,000 Bitcoin, and on the other, you have every other public company combined buying only 1,000. This isn't just a lead anymore, it's total domination of the playing field.
But hey, don't just take my word for it. Let's look at the on-chain data, because the charts paint an even clearer picture of this incredible market concentration. Now, what's really fascinating about this slide is it's not just showing volume, but the frequency of purchases. At its peak, other companies were making 54 separate buys in a 30-day period. That number has crashed to just 13. This shows a broad retreat across the entire industry.
And this next chart shows the result of that retreat. Look at the pink line, representing all those other companies. It's flat. They're holding steady, but they're not buying more. Now look at the purple line, MicroStrategy. It's a rocket ship. The divergence is just absolute.
So here's the bottom line. When you add it all up, MicroStrategy now holds a stunning 76% of all Bitcoin held in corporate treasuries. 3/4 of the entire market is in the hands of a single entity.
This table just puts that dominance into stark relief. After MicroStrategy's 76%, the next biggest holders, 21 and Metaplanet, are sitting at just over 4% and 3.5% respectively. The gap between first and second place isn't a gap, it's a chasm.
So why does this matter? One company believing in Bitcoin is great, right? Well, maybe. But this level of extreme concentration introduces a whole new set of very serious risks for the entire market. As one analysis puts it, the concentration of coins in a few hands is always a danger. This gets right to the heart of the issue. An asset designed for decentralization is becoming incredibly centralized.
So let's break down these risks. You have extreme concentration of supply, which leads to centralization, the exact opposite of Bitcoin's goal. You have a loss of independence, tying Bitcoin's fate to traditional finance. And most critically, you create a single point of failure. What happens to the market if the biggest buyer suddenly decides to sell? And that's the bigger ideological shift. An asset class created to be an alternative now sees its ownership dominated by a handful of major U.S. financial players like MicroStrategy, BlackRock, and Grayscale. The line between the old economy and the new is getting blurrier by the day.
This leads us to a fascinating strategic split that's starting to emerge. While a few entities are consolidating the supply of coins, others are focusing on a different path to influence.
This creates two distinct paths to influence. You have the money strategy, perfected by MicroStrategy, just buy as much Bitcoin as you possibly can, and then you have the power strategy, competing in mining. Owning the coins gives you market influence, but controlling the network's infrastructure, the miners, could give you influence over the future rules of Bitcoin itself.
Make no mistake, what we're witnessing right now is a crucial moment. The strategic decisions being made today by a few powerful players are literally building the foundation of tomorrow's financial system. We're watching history being written, block by block. And this leaves us with the final question. Bitcoin's original vision was one of radical decentralization, but as the corporate market is consolidated into the hands of a very small number of powerful players,
Is that original vision still achievable, or are we watching it being rewritten right before our very eyes?